Well, global markets mostly clawing back from the sell-off earlier in the week as geopolitics took center stage. Trump stepped back from threats to impose tariffs or use force to press for control of Greenland, saying a deal with NATO allies is taking shape. Well, after meeting NATO Secretary General Mark Rutte in Davos, Trump saying a long-term agreement could secure Arctic defense as well as access to critical minerals and block Russia and China. Meanwhile, expectations of strong U.S. economic growth are making near-term Fed rate cuts unlikely, with inflation still above the 2% target. At the same time, concerns are growing over political pressure on the Federal Reserve. Joining me here at the New York Stock Exchange on this Friday morning is James Knightley, ING's chief international economist based in New York. Well, James, good morning and Happy New Year. So 2026 has been off to quite the start. So when we take a look at geopolitics as well as politics, where do you stand right now?
Yeah, no, so this week's been quite a volatile week for that sort of thing, but it does seem as though things are calming down. It looks as though we're getting a deal done in some description on Denmark, so that's calming the European-US attitudes and the tensions there. So it looks as though we can start to drift back and looking at more what's going on in the underlying macro story, and in that regard, we're going to be really closely watching what the Fed says and what the Fed does over the next few weeks and months.
Yeah, and as you mentioned that we are counting down to the first Federal Reserve meeting of 2026 next week, and while no change in rate is expected, Fed Chair Powell will be speaking, and there have been a lot of political undercurrents when it comes to the central bank here in the U.S., but so far, given the latest economic data, where do you stand when it comes to the labor market and inflation?
Yeah, so I think the Fed's going to be quite interesting because, of course, from a data perspective, the economy's pretty good shape. Inflation's above target. The labour market's in reasonable shape as well. Unemployment's low. And, of course, equity markets are pretty much all-time highs. So from a macro perspective, there's no real justification for further cuts. And, of course, also, remember that January 11th appearance by Jerome Powell, where he sort of really dug his heels in and says, no, look, the Fed independence is critical and I'm going to stand here and protect that. So from that perspective, there doesn't seem any chance of a rate change in the next week or so. But we are, as you say, watching those job numbers very, very carefully because that's where the weakness could lie. We've already seen, for example, that over the last 3 years, the US has added over 5 million jobs, but 93% of those have been in just 3 sectors: government, leisure and hospitality, and private education and healthcare services. That's a real concentration. There's no breadth to that, and that's what I think is worrying a few people.
Yeah, and the gathering that took place in Davos, Switzerland, the World Economic Forum, is coming to a close, and we will shift our focus away from Davos as we head into next week. But of course, when we take a look at the other economies of the world and politics, this week we were fixated on what was happening on the global bond markets, in particular with JGBs in Japan. So what do you think diversification of global fixed income looks like now?
No, I think that's a really interesting question because for so long it's just been the US, just follow the US and everything else will just drift along nicely. But now we are getting some idiosyncratic stories. The Japanese, the JGB story, the yen story this morning as well. So there's more going on there. There's going to be rate hikes coming through in Japan versus rate cuts in the United States. And Europe's also looking a little bit more interesting. The growth story is looking a little bit better. We're going to get more fiscal support coming through. Rates are not changing there. So you're seeing a little bit more diversification. And therefore, if there's more diversification in economic performance, there's going to be more diversification in asset performance. So other markets are going to start to become a little bit more interesting, I think.
Yeah, and finally, before I let you go on this Friday morning, we are keeping a close eye on precious metals. We are looking at gold and silver at new record highs, but at the same time, we're keeping a close eye on the U.S. currency here, as well as treasury yields stateside. So where do you think the dollar is headed as we go further into 2026?
Yeah, normally in times of uncertainty, you would think U.S. treasuries and the dollar would be a safe haven, but that's been turned on its head, and so you've got fewer and fewer notional safe havens, and that's, I think, why precious metals are doing so well is a key response here. Now, in terms of the dollar view, I think, we are seeing a story where the US rates are being lowered, European rates are steady, other rates are going higher. So from that interest rate differential story, that implies weaker dollar, but also from the diversification story you just alluded to, I think that's becoming an important theme as well. People are just looking at alternatives. They're looking at other options in terms of where to invest their money, and that, to me, also implies a bit more softness to the dollar over the 2026.
Yeah, and because you mentioned rate differentials, when we look at the other G7 central banks, what does it mean in terms of the major currency pairs?
Yeah, I think in general we are looking for broad-based dollar softness. From a portfolio perspective, emerging markets are the hot topic of this year in terms of diversification away. Europe looking a little bit more stable as well. But again, it's that rate differential, as you say. Japan is going to be hiking rates, US is going to be cutting rates, so that we're going to get that sort of divergent story coming through. So in general, dollar weakness against most currencies, but it's a relative story. Japan, we think there could be more strength because of that rate differential becoming much more of a theme because of rate hikes. So lots of things going on, but in general, dollar softness.
Well, thank you so much for joining us, and thank you so much for covering a broad swath of topics as we kick off 2026.
Thanks a lot.
Thank you.